The American rental market has taken renters, landlords, and investors on a roller coaster ride over the past few years. After the pandemic sparked record rent spikes in 2021 and 2022, many tenants hoped the bubble would burst. By 2023, prices were still climbing in major cities, leaving millions stretched thin. But in 2025, the story has finally shifted. Rent prices are starting to cool, though not evenly across the country. National data shows that, on average, rent growth has slowed dramatically. In some metro areas, particularly on the West Coast and parts of the Midwest, average rents have actually declined compared to last year. Cities like San Francisco, Phoenix, and Seattle are seeing rent reductions as a flood of new apartment construction hits the market. Landlords in these regions are competing for tenants, offering discounts, free first months, and other incentives. For renters in these areas, 2025 feels like a much-needed relief. But before you think the rent crisis is over, here's the catch. Not every city is experiencing this cool down. States with fast-growing populations like Florida, Texas, and Nevada are still seeing rents hold steady or even rise. Cities such as Miami, Dallas, and Las Vegas remain red-hot rental markets because demand continues to outpace supply. People are moving in faster than new housing can be built, keeping prices high. A major factor shaping rent in 2025 is the Federal Reserve's policy on interest rates. Higher borrowing costs make homeownership more difficult for many, pushing would-be buyers into the rental market instead. This keeps demand alive, even when more apartments are built. On the other hand, the surge in multifamily construction in 2022-2024 finally delivered results, especially in urban hubs, helping to balance out supply. The key takeaway for renters is this: 2025 is a year of uneven opportunity. If you live in an oversupplied metro, you may finally get negotiating power. If you're in a fast-growing Sunbelt city, you may still be stuck fighting for affordable housing. For landlords and investors, it's a test of adaptability. Those in high-supply areas will need to get creative to attract tenants, while those in booming states can continue to charge premium prices. As we move deeper into 2025, one thing is clear: the national rent crisis isn't over, but it's beginning to fracture. For the first time in years, renters in some corners of America are catching a break, while others are bracing for yet another year of financial strain. While much of the country is finally seeing rent relief in 2025, certain states continue to experience relentless price increases. These are the regions where demand still outweighs supply, and where renters are feeling the sting of higher housing costs month after month. At the top of the list is Florida. Despite a massive construction boom, cities like Miami, Tampa, and Orlando remain magnets for new residents. The influx of retirees, remote workers, and international buyers keeps pushing rents upward. Miami in particular has some of the steepest increases in the nation, with limited affordable housing options and extremely high demand for coastal living. Even as the rest of the U.S. cools, Florida renters are paying more than ever before. Next is Texas, especially in booming cities like Austin, Dallas, and Houston. Job growth in tech, healthcare, and energy continues to attract people from across the country. The population surge has fueled demand for apartments, condos, and single-family rentals. Although developers are building at record speed, construction simply cannot keep up with the number of people moving in. Austin's reputation as a cultural and tech hub ensures that rents there remain among the fastest rising in the nation. Nevada is another hotspot where renters face rising costs. Las Vegas has become one of the most popular relocation destinations in the past 5 years, drawing people in with its relatively low taxes, strong job market, and entertainment-driven economy. But with thousands of new residents moving in each month, supply is stretched thin. Even though new high-rise apartments are being built across the city, rental prices continue to climb at an above-average pace. Finally, Arizona deserves mention. Phoenix, once considered an affordable desert city, has experienced a wave of migration from California and other expensive states. The result is a rental market that remains hot, even as parts of the Midwest and Northeast see declines. The common thread across these states is population growth combined with limited supply. As more people move to the Sun Belt for jobs, warmer weather, and lifestyle opportunities, rents are pushed higher. Landlords in these areas hold the advantage, while renters are forced to pay premiums or face limited options. For renters, the lesson is clear. While relief is on the horizon in some regions, Florida, Texas, Nevada, and Arizona continue to buck the national trend. If you live in these states, prepare for another challenging year of rising rental costs. Across the U.S., 2025 is shaping up to be the year many renters have been waiting for. After years of steep rent hikes, certain cities are finally seeing relief, with rents cooling or even dropping. This shift is driven by oversupply, slowing demand, and changing migration patterns, giving renters in these cities a long-awaited break. One of the clearest examples is Austin, Texas. After years of being one of the fastest-growing rental markets, Austin is now facing an oversupply problem. Developers built thousands of new apartments to keep up with booming demand during the pandemic years, but the wave of supply has outpaced current demand. As a result, landlords are offering discounts, move-in specials, and even free months of rent to fill units. This has led to a noticeable decline in rental costs across the city. Atlanta, Georgia, is another market experiencing rent softening. The city saw a surge of migration in 2021 to 2023, but that pace has slowed. Meanwhile, new apartment complexes have continued to open across the metro area. With more units available and less urgency among renters, prices are finally starting to stabilize and in some cases dip. For tenants, this means more negotiating power and better deals. The same story is playing out in Phoenix, Arizona. Once one of the hottest rental markets in the country, Phoenix is now facing cooling demand as many who relocated there for affordability are reconsidering the rising costs of desert living. Combined with new housing developments coming online, the rental market is softening. It's not a dramatic crash, but prices are trending downward, giving renters more breathing room. Las Vegas, Nevada, is also experiencing rent relief. After years of surging prices due to massive population growth, new construction has helped balance the market. Renters moving in now can find deals that were unheard of just a year ago. Incentives such as reduced deposits and free utilities are becoming common again, signaling that landlords are competing harder for tenants. Lastly, Charlotte, North Carolina, which became a popular destination for remote workers, is showing signs of rent stabilization. With remote work patterns shifting and affordability concerns rising, fewer people are rushing to relocate, giving existing renters more options and leverage. The trend across these cities is clear. When supply catches up with demand, renters win. While the overall national rental market is still expensive, these specific metros are offering hope that relief is possible, and that renters don't always have to accept rising costs as the norm. At first glance, rent might look straightforward. You see the monthly number, sign the lease, and pay. But in 2025, the reality of renting is far more complicated. Renters are finding that the listed price is only part of the story, with hidden fees and unexpected expenses piling up, making affordability harder than ever. One major hidden cost comes from amenity fees. Many new apartment complexes advertise gyms, pools, co-working spaces, and rooftop lounges. But whether you use them or not, you're often charged monthly fees ranging from $50 to $200. In some cases, landlords even bundle these into mandatory community fees, meaning you're paying for services you may never touch. Another burden is the rise of convenience fees. These include charges for paying rent online, package delivery services, or even trash pickup. A renter might agree to a $1,500 monthly rent, but then discover $100 or more in extra monthly charges they didn't expect. Over the course of a year, these small fees add up to thousands of dollars. Insurance requirements have also grown stricter. More landlords are now requiring renters insurance with specific coverage minimums. While insurance itself is not costly, being locked into certain policies chosen by property managers often raises expenses beyond what tenants would voluntarily choose. Then there's the issue of renewal increases. Many tenants enter leases with a manageable rate, only to face hikes of 10 to 20% at renewal time. While technically not hidden, these increases are often buried in fine print or glossed over during initial lease discussions. This practice traps renters who don't want to face the expense and hassle of moving. Another factor in 2025 is utility pass-throughs. In some buildings, landlords no longer cover basic utilities like water or trash. Instead, they pass costs directly to tenants through third-party billing companies that often charge administrative fees on top of actual usage. Even moving itself is more expensive than ever. Security deposits are climbing, pet fees are increasingly non-refundable, and some landlords now require upfront payments of 2 or 3 months' rent for approval. For many, the true cost of moving into a new rental is double or triple the advertised monthly rent. The takeaway is clear. In 2025, the rent number you see is rarely the full cost. For renters, understanding these hidden fees is critical before signing a lease. Always ask questions, read the fine print, and budget for more than just the base rent, because the extras are where landlords make their money. For decades, Americans have been told that buying a home is the ultimate financial goal, the cornerstone of wealth building. But in 2025, the debate between renting and buying is more complicated than ever. With housing prices still high, mortgage rates stubbornly elevated, and rent costs fluctuating across the country, the question isn't simple. Should you rent or should you buy? On one side of the debate, buying a home still offers long-term stability. Fixed-rate mortgages, while more expensive than in the past, provide predictability. Unlike rent, which can jump every year, a mortgage locks in monthly payments for decades. Owning also builds equity, meaning every payment adds to your personal wealth rather than a landlord's. For many, this remains the strongest argument in favor of buying. But the reality is that the barrier to entry has grown significantly. In many states, the average down payment is now well over $50,000, not including closing costs, inspections, and other fees. For younger generations burdened with student debt and rising living expenses, saving that much cash is nearly impossible. Meanwhile, renting offers flexibility. In uncertain times, being able to relocate for jobs, family, or financial reasons is an advantage. Renters don't shoulder property taxes, maintenance costs, or unexpected repairs, all of which homeowners face. In 2025, the average homeowner spends nearly $4,000 a year just on maintenance, a cost renters avoid entirely. However, renting comes with its own risks. Rent hikes remain unpredictable, and in high-demand areas like Florida, Nevada, and Texas, tenants are seeing double-digit increases at lease renewal. Renters also miss out on the equity-building benefits of ownership, meaning years of payments may leave them with nothing to show for it financially. The debate ultimately depends on location, timing, and personal priorities. In some markets, renting may still be the smarter move if home prices are inflated and interest rates remain high. In others, especially in more affordable regions, buying may lock in costs and create stability for the long run. What's clear is that the old advice, buying is always better than renting, no longer holds true universally. In 2025, each individual or family must carefully weigh the hidden costs, financial risks, and lifestyle flexibility before making their decision. Renting may provide breathing room in the short term, while buying may still prove the better wealth-building choice over time.